Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be looking at a question I get asked all the time, and that is, where is the next pullback going to be from? And if you've been watching my videos for the last year at least, then you'll know that I've been looking at a few certain indicators which give us a clue. At the end of the day, nobody knows the future. Nobody knows what's going to happen tomorrow. But what we do have is the evidence in the chart, which is going back all the way to 2010 here. So we're going to have a quick look at exactly what the charts have been telling us in terms of deducing from them where the pullback might be over here in the current market situation. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or even swing trade decisions. Okay, let's quickly get into this. This is the overall chart for Bitcoin since 2010 all the way to the current situation today on the 30th of November 2023. So what I'm going to do is I'm just going to look at a few simple indicators which I've been showing you. So really this video is all about making sure we don't miss the next move. And so far in my recent videos, this is what I've shown you, and I just want to review that, refresh your minds exactly what we can expect from these indicators. So going back to the first cycle, so I'm just going to divide it into the halvings. So this red line, this vertical line here is the first halving, second halving, the third halving, and the current halving coming up in April 2024. So just about 5 months to go. And I just want to have a look at the Fibonacci retracement of where the market, when it bottoms out here, where it comes up to before the halving. So very simply, from the top of that market to the bottom, before the halving, we get nearly to the 78.6. Remember, this is a new asset class here, so it hasn't really established itself, but at the end of the day, it's come up nearly to the 78.6, but certainly to the 61.8. So this is what we know. In the first cycle, it came past the 61.8 and nearly to the 78. In the second halving here, if we do the same thing again, one more time, from the top to the bottom, and once again, the 78.6 is the one that it mingles with before the halving here. So here it nearly got to the 78.6. Here we actually hit it right on the nose and came back. And in the last cycle, from the top to the bottom, and would you believe it, 78.6 one more time. So we know now in the last 3 cycles, it's come up nearly to the 78.6, to the 78.6, and once again up to the 78.6. So if I had to put a weight on which are more important, I'd put it on the second and the third cycle, because at the beginning of an asset, everything is just getting going, and the volatility doesn't really reflect what it's going to do in its maturity as time goes on. So just based on the last 3 cycles, we can say that with a higher probability that when we come up here from the 69,000 to the 15,400, the 78.6 is exactly at 50,200 at this point here. And this is the line I've got marked out since the beginning of this year. So these 2 lines, the 61.8, this one here, this is virtually where we are now. We'll have a closer look at this in a minute. But I just want to give you the overall bigger picture so you know exactly in relation to the previous cycles what it's done and what it is most likely and probable to do. And the 61.8 is exactly at 40,000. So these are the 2 levels I've been mapping out for the last year. So this is with a higher probability, I would say 78.6, 50,000 seems the most likely figure that we're going to come up to and then top out back to this orange line which I've been showing you in the last few videos. But unlike other people, we have 2 tricks up our sleeve which nobody seems to be looking at. And on the BLX chart here, we've got the pi cycle which seems to confirm the 78.6. So as you can see, before the first halving, we hit the red line, the pi cycle red line before the halving. Once again, we hit the red line twice here before the halving. Before the next halving, which was the last halving in 2020, we hit the red line one more time. So obviously with a higher probability, based on the evidence in the chart, going back to 2010 and all the halvings previously, before this halving, we should hit this red line. And so where is it? Currently it's at 54,000 and the 78.6 is at 50,000. But notice one thing, it didn't just hit the red line, it went above it. This one actually hit the red line and came back. This one went above the red line. So what we can deduce is that these indicators are there just to indicate, they're a guide. So to me, the way I read it, it could obviously be wrong, but I can only go by what is in the charts and make up my own opinion on it. And that is that when it comes up to the 78.6, we know that it's hit the red line every single time. So what I would expect before the halving, we're going to go above the 78.6 and hit the red line at 55,000. And it may well come down to the 78.6 at 50,000 because we may have a correction at the 61.8, which is at 40,000. And why the 40,000 is very important, if I look at our second trick that we've got up our sleeve, and because that indicator is not available on the BLX, we'll have to have a look at the non-BLX Bitcoin chart. So here it is, the second trick we've got up our sleeve. So just like a rabbit out of a hat, we've got this RSI MTF, which is currently at 40,400, as you can see here. So that is right in the middle of the 61.8 level. So just by a few lines, a few indicators, what we've now got is a higher probability move that we're going to be pulling back. Firstly, maybe from this point here, and I'll show you with the 60-day cycle why this is more important now because we're getting more deeper into the cycle. So if we do pull back down here, the pi cycle should start moving down as well. So the next move up depends on where this is. It could be anywhere in this region here, between 48 and 52,000. So wherever this red line is going to be before the halving, that is where the major next pullback is going to be from. Why the RSI MTF line? Well, if we go back in history, in the last cycle, when we bottomed out at 3,100, we hit the yellow line, the RSI MTF, and had this minor pullback before we went and hit the red line and had a major pullback. And in the previous cycle, we didn't quite hit it, but this was a good guide as to where the pullback was going to be. So one more time, here we had a major pullback, but this was another major pullback here as well. And that was on the red line here. So we've now built up a picture that before the next halving, April 2024, the higher probability is that Bitcoin is going to come up to the 61.8 at 40,000. And that is exactly where the RSI MTF line is. And we can expect some sort of a pullback, hopefully a minor pullback, and then the next move will be to the major pullback level here, wherever this red line is going to be, currently at 54, but where this comes back up to the next time and meets the red line, wherever that's going to be. So, but we know that the 78.6 is at this level here, 50,000. So that would provide the confluence for that move. Okay, just a quick look at exactly what's happening to the current situation. What we're really developing here is an ascending triangle. And as I showed you in the definition of that, they have a very high likelihood or the probability to move to the upside. It is a continuation pattern. And there is nothing in the candlestick patterns that tells me otherwise. But something on the weekly chart is giving us a clue as to which direction this market is about to go. If you notice these candlestick patterns, they're getting less and less in body as well as longer wicks at the bottom. Where did we see that happening in the last year? Well, if we go back to the previous tops here, we had wicks to the top side and less wicks to the bottom side here. So that was giving an indication, not always the case, but most of the time, that this is now topping out and that we're more likely, higher probability to go to the downside. But look at the wicks here. This is giving us a clue. What we've got here is wicks which are longer at the bottom. And these long wicks basically tell us that there is a rejection of lower prices and that any amount of selling is being bought up very, very quickly. And this is exactly what's happening here. So the question is, what happened at this situation when there was a rejection of lower prices? Well, we had one more move to the upside before the anticipated pullback at this point into the 25.2. So what I would deduce from there is that with the rejection of prices coming up here and with the background of the ETF, where some of those companies that are applying for the ETF, I wouldn't be surprised if they're buying up all this demand here. And there's going to come a point where there's going to be one big move into the 61.8 zone here, where the RSI MTF line is. There we go there. And if we marry that up with the 60-day cycle, currently we're on day 49. So we've got 11 days to the end of this cycle. Obviously, we have the flexibility of 10, 15 days either way. Remember, the last cycle was 51 days, the one before 68 days, etc. So we've got to keep flexible and fluid, as I keep saying. So we've still got quite a bit of this cycle to go. It could go sideways into the 60-day cycle, then move up. That would be very bullish. We've now made a higher high from before the midpoint, this white line here. So we've now got a right translated cycle. So it has earned the right now to have a pullback into the 60-day cycle. However, as I mentioned, there's a lot of demand being picked up at every rising demand all along here. So this really should continue at least into the 60-day cycle here. And only time will tell. But if we do have a fallback like we did over here in this cycle just before the end of the 60-day cycle, we could have a similar thing. But I would expect, on balance, with what I've just shown you, to go into the 61.8 level, around 40,000. Okay, finally, I just want to give you an update on the swing trades, which I know a lot of you are following, but I know you're interested on the Bitcoin Private Members Club, exactly what we're doing there. So currently we're on round 4 of the swing trades, which was started around about April this year. And the current state of affairs is that at yesterday's close, on the Bitcoin miners here, we've so far achieved from 18th of October, 7.5%, 33%, minus 5%. We've got 2 live trades currently going on. One is up 40% and the other one is up 5% so far. And we should be able to run these into the end of the 60-day cycle, which I've just shown you. Because all these trades are based on picking the trades up at the beginning of each 60-day cycle, which is usually at the bottom of that new cycle. So this was our round 1 swing trades in March 2023. And this is what we achieved at that time: 37, 22, 52, 42, got stopped out, 39 and 21. Round 2 swing trades, July 2023. These were in Marathon, Cypher, Stronghold and Bit Digital, and we achieved 56, 85 and 86 and 0%. And in the third round, we got stopped out because we had 2 failed cycles over here. So you can see how the 60-day cycles are incredibly important when doing swing trades. So our 5th round of the swing trades will start once we have this pullback anywhere into the 60-day cycle and a new cycle starts. So this is where the next lot of the swing trades are going to be from. And if that's something that interests you, and it doesn't interest everybody, I understand that. And if you're of a nervous disposition, I would not get into this. But if you want that as a serious option for trading the cycles, especially the 60-day cycle, then all you have to do is go to any of my videos and click the button at the bottom. And for the price of a coffee per week, you get access to all the previous videos, all the current trades, and all the technical analysis that we do every single Wednesday, with bonus videos in between. And there are just only 4 spaces left. And the only way to get in after that will be when somebody cancels from the Bitcoin Miners Club. So why am I interested in the Bitcoin miners, you may ask? Well, you only have to go back to the previous cycle that one of the major Bitcoin miners, Marathon Digital Holdings, as you can see, before the last halving, it had a big run down before it turned around and went up from the halving here all the way to its all-time high by 235x. Obviously, no one can guarantee that's what's going to happen, but as I've shown you in my charts, the chart patterns and fractals all repeat over and over again. If we can get even 50% of that over here, then I think we'll have done really well. And you can see that before this halving, just like over here, the Bitcoin miners all came down before the halving, before they shot up. That's exactly what they've done just recently. And this was a great opportunity to get in. And even at this point, it's still a magnificent opportunity before the halving, before we do this, just like replicating this over here. So at the Bitcoin Miners Club, this is what we're expecting. Whether we get it, only time will tell. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.